Hello, welcome back to our viewers online and those in the room. Thank you for being here with us today, and welcome to Brussels for those of you that have traveled especially for the conference. My name is Ananya Kumar. I'm the Deputy Director at the Atlantic Council's Geoeconomic Center, and I have the special honor of moderating this panel. But I've had the pleasure of talking to my honored panelists for about 4 years now, and this is going to be a continuation of the conversation that we've been having for a long time. So let me introduce Maria Demertzis, leader of Economic Strategy and Finance Program at the Conference Board, Europe. Jennifer Fowler, who's a member of the Secretariat at the Financial Stability Board in Basel. Candace Kelly, who's the Chief Legal Officer at the Stellar Development Foundation. Jesse McWaters, Executive Vice President, Head of Global Policy at Mastercard. Thank you all for being with us. Maria, let's get started. Let's get right to the point. We've had this conversation many times, and exactly this format many times. But specifically, we were here in Berlin about 2 years ago, having a similar but slightly different conversation on cross-border payments. 2 years have passed. What's happened in Europe since that has changed the transatlantic dynamic when it comes to payments?
Thank you very much for continuing the conversation on this. And indeed, actually, we were almost the same panelists back 2 years ago. And it's actually interesting to see how things have shifted since then. I'm going to join the rest of the conference today to point out that the big thing that has changed is uncertainty. Today, the world is a lot more uncertain than it was back then. And what's interesting about that, the word uncertainty has been with us since the global financial crisis. But I think what is really different now, and particularly in the last 2 years, is the fact that we have policy uncertainty. The fact that we don't know what policy decisions will be made. We've heard it this morning many times, how detrimental that is to businesses, to planning, to investments, to everything, to the economy, really. So I think that is really the big thing. And if I was to be a little bit more provocative, and since I am based in Brussels, and I'm actually the only one here talking from the Brussels perspective, I think there is an element of trust that is being eroded. And I think that is what complicates things. And it has an important implication here, and that is that the issue of security and economic security in the context of what we're discussing here is really first-order problem now in Europe. And I think that is really what I certainly believe, that while we are fighting for competitiveness and security, I think we maybe need to flip these things around in the sense that economic security, without economic security, we don't have choices. And in order to address the issue of competitiveness, we need choices. So I think that is really the new thing in the discussion.
Yeah, and you're not going to be the first person to talk about uncertainty and instability, certainly not on this panel, but throughout the discussions today. Jesse, let me turn to you as also the repeat offender here about what have been the payment sector developments in the US that have impacted Europe in the last 2 years?
So Maria's already grabbed uncertainty from the bingo card. Let me put crypto on your bingo card. After a couple of years in the FTX penalty box, crypto is back at the top of the policy agenda, certainly when it comes to discussing cross-border payments. The passage of the Genius Act in the United States has people all a Twitter about stablecoins, and I think that's obviously really important. But I think when we dig beneath the surface, what we're seeing is a greater openness to the consideration of the use of public permissionless blockchains in financial services, including for regulated assets. And so while stablecoins already exist in this world that operates 24/7, 365, that is programmable, and that is inherently sort of out of the box global in terms of its operations, I think that as you see use cases for stablecoins start to develop traction, you're inevitably going to see a kind of draw in an investment in experimentation and development on the use of other types of assets, particularly commercial bank money, as well as the development of netting facilities as the sort of capital intensivity of stablecoins as a settlement instrument being inherently sort of gross and and pre-funded, sort of creates some challenges around their use and scaling. At Mastercard, we're really interested in both of these. Working on stablecoin settlement, also working on projects like Agora, which experimenting with tokenized deposits. But to bring it back to cross-border payments, I think I would say that we see really exciting opportunities around the use of blockchain to simplify elements of the cross-border settlement space. But I want to make a note of caution around viewing these as a panacea. There are a lot of us here who spend a lot of time in the regulatory space. Cross-border payments is about more than just fixing potholes on the road to settlement. It's about aligning regulatory frameworks. It's about identifying shared and common standards. It's about simplifying what is an increasingly complicated space for the transfer of data related to payments. And I think that if we just sort of assume that new settlement systems are automatically going to fix those problems, we risk being sorely disappointed.
Thanks, Jesse. And one thing that's certainly different in the last 2 years is that we've often started, especially in Europe, with talking about the digital euro before we got to stablecoins and crypto and other things. So that's certainly a bit of a distinction in the last 2 years and where conversation has evolved. Jesse mentioned Project Agora. Let me turn to you, Jennifer. All of these conversations that we've had are happening in the context of Agora, which is now in sort of its final phases. Could you tell us if Agora's motivations when it started out 2 years ago still match with what has happened on the product end there? And what is the sort of big lesson you've taken from working across 7 jurisdictions and 40 central banks?
Yeah, thank you for the question. I think Agora is such an exciting project. I'm going to speak about it from my role at the FSB. I've been supporting the project on a couple of different aspects. The original inspiration for Agora remains the same, which is to really try to fix the key challenges that we see in cross-border payments, of payments that are too slow, that are costing too much, they're not transparent, not accessible. So that's really still the inspiration. Of course, it's the same inspiration as the roadmap, the G20 roadmap for cross-border payments. What Agora does is try to use DLT to address those issues in many ways. As Jesse said, one important aspect, of course, is putting both tokenized commercial money and tokenized central bank money on a unified ledger, which, of course, is a concept the BIS has been talking about for some time. But also to try to use programmability and composability to really streamline the process of moving money. And a lot of that comes out of the sequential nature of payments today. And so trying to use that to be able to achieve that efficiency. What I would say the most important thing about Agora is the public-private collaboration. It's really incredible. As you said, I think there's 7 central banks, 40 private sector entities. But it's not just numbers. There's regional diversity. There's a lot of diversity in terms of business models. There are card networks. There are really systemically important financial institutions. There are domestically important financial institutions. So it's just a real diversity of views. And I think that is what's so promising, because it gives you the potential of building something that has staying power.
That makes a lot of sense. Candace, let me turn back to stablecoins. We've had a little bit of a stablecoin summer with the passage of Genius in the US. As we're heading into what is going to be a rulemaking process in the US, what needs to be done so that MiCA and Genius can work together better?
Yeah, well, thanks. That's a great question, and not an easy one. I think conceptually it seems pretty simple to say that we need to have reciprocity, which is specifically called out in the Genius Act and what the Treasury Department is working on in their rulemaking. In order to have blockchain reach its potential of being able to have seamless cross-border payments, the regulatory regimes, as Jesse pointed out, have to be reciprocal. I think harmonization is something that people like to say, and I don't think that we've seen that in any legal framework, and so I'm glad that we're not talking about trying to harmonize. But there are a lot of obstacles because MiCA doesn't have that provision, and I think there are some amendments being discussed, but I think there's a lot of work to be done between the EU and the US on that, on what does it look like. When you think about the specifics of enforcement, cooperation on enforcement, on supervision, on what if you have an issuer in one jurisdiction that there's reciprocity in the other, and that issuer fails or has significant problems? How do you make sure that the consumers are protected equally in two different jurisdictions? So there's a lot of work to be done. I am very encouraged today by listening to how pragmatic the discussion is in the trade and tariff conversation, which is not my area of expertise, so I'm learning a lot today, and I hope that pragmatism comes to this discussion, because I think, as Jesse pointed out, the conversation about blockchain and stablecoins being a game changer in cross-border payments has matured so dramatically, and that, and thanks to projects like Agora as well, it's no longer a question of whether this is a good solution, it's how do we make it work.
Mm-hmm. Let me turn a little bit to one of the main themes of the conference, which is competition and innovation, also a big theme that comes up when we think about the European Commission and its approach. We've talked a little bit about Genius and a little bit about Mika. Maria, from your perspective, what is the difference between the US and EU approach to competition and innovation when it comes to their payment sector?
I think it carries over in many other things, and it also demonstrated also in payments. But I think I come back to my original point, because I think that is driving the discussion. As you know, on the digital payment front in Europe, we've gone down the public route, which is the digital euro, rather than the establishment of private solutions. This might change in the future, and one of the wishes of the ECB is actually to provide a platform for the private sector to thrive. The private sector hadn't provided payment systems that are common across all EU countries till now, and this is one of the big motivations behind providing a public solution, which is just one common digital payment in Europe. So that is one. But the second one, and this is the one that's really different from 2 years ago, is this issue of what I called economic security, financial security, the need to depend more on our own feet and to diversify. And if you look about the financial dependencies that the EU have, I come back to the choke points that Eddie talked about. The dollar is a choke point for Europe, and the fact that banks are exposed to dollars on exchange rate risks, we have the payment systems, we have liquidity provision in times of crisis. All of this in the EU depends very much on the US, and it's becoming uncomfortable. And I think this is really what's driving the discussion. And on the payment systems, I mean, Jess, we've discussed this many times, but I think this is now one of the biggest motivations, is to try and have a European solution that is going to be truly European, public or private, hopefully private, but at least as a way of providing an alternative, because payment systems in Europe are dominated by US players. This is an issue that is being discussed, and if you're serious about economic security and business continuity, you really have to advance this. This is what the digital euro is aiming to do hopefully in the near future. So competition here is as part of industrial policy. There is nothing. I mean, the digital euro really is industrial policy, and we heard it this morning too. Industrial policy as a tool that violates competition principles, but as a way of providing other needs, and that is of course security.
Right. I think the tension is very clear here between the US and EU. Candace, I'm going to turn to you as someone who operates their business globally. How do you see it outside of these two jurisdictions? How do you see the challenges of calibrating to different approaches of innovation and competition?
Well, I think that for me, the EU and the US really do drive that and drive the business models, because just like you see in the privacy space, for example, there's a standard, and business, to be able to move quickly, you need to meet those standards even if they are lower in other jurisdictions. So I do think that those the US and the EU are probably the most critical. But obviously there's very different approaches, right? In the US, we're all celebrating the Genius Act. It's one piece of legislation about payment stablecoins, and so there's a lot more to be done. Even as the U.S. continues, I think, to have a more innovation-led and industry-led approach, there's still a lot of work to be done, and the legislative momentum is critical to make sure that we continue to see the industry be able to innovate and do it responsibly.
Yeah, and of course here we're talking about payments, but just as a quick plug, we have about 5 reports out as a part of the Transatlantic Forum. One is about different AI strategies that EU and US have taken, and some of these issues that we're talking about of instability and sovereignty have come up again and again on other emerging tech issues as well. Jesse, what we're talking here is about sort of a fragmented regulatory approach across the US and EU, not just on innovation, but also what it seems like veering into into the traditional payment sphere. Where do you see the sort of most acute instances of fragmentation, and how can they be bridged?
I think maybe I'll pull on a thread that Maria started talking about. I mean, I think it's obvious to anyone who's been sitting and listening to the panels today that we live in a world of increased geostrategic uncertainty, increased geoeconomic competition, and it is only reasonable that in such an environment, countries and regions will start to shift the way in which they think about what payment sector resilience really means to them. I think this isn't purely an artifact of the current U.S. administration. I think this is really continuing a thread that started at least as early as the pandemic, as the rapid digitization of payments across many economies led policymakers to reflect more and more on the centrality of payments to elements of their own domestic policy and their domestic security. At the same time, I think we believe really strongly that it's possible to find a balance between, on one hand, taking actions to ensure the resilience of payment systems, encouraging domestic payment operators and domestic payments, while at the same time continuing to encourage competition, continuing to encourage innovation, and particularly to finding ways to continue to incent investments in the security and stability of payment systems. So if we think, for example, about the rising risks that we see in payments in response to AI-driven fraud, in response to state and non-state-backed cyber warfare. These are really serious challenges that payment systems face, and we believe that they need sustained and significant investment in order to meet them. And so that's why, to put in a plug for my employer, since 2018, Mastercard has invested over $10 billion in cybersecurity and fraud protections within our payment system, with much of that investment being deployed in our Waterloo Cybersecurity Center, not too far from where we're having this conversation. And so I think we are really hopeful that here in Europe and elsewhere, that a path can be found that both finds a way to encourage new payments players, new innovation, new sources of competition, while at the same time remaining true to the principles of competition, innovation, and really letting the market drive as much as possible the shape of financial innovation.
Thanks, Jesse. And before I turn back to our speakers for responses, I want to really quickly show an image from our CBDC tracker that looks at cross-border payments and really helps contextualize what we're talking about today. So this tracker is about 4.5 years old, and when we started the project, there were about 35 countries interested in CBDCs. That number now is at 137, so that's really huge. But here we really specifically look at cross-border CBDCs projects and see how that's developed over time, especially since Russia's invasion of Ukraine. I really wanted to just take a moment to contextualize the real flow of money that is now happening through some of these cross-border projects. Let's turn to sort of future solutions and what's coming up next year. So the G20 has traditionally worked on the payments roadmap, which has in many ways defined targets for cross-border payments, targets for retail payments, targets for remittance payments, sort of important legs of cross-border payments across the world. That roadmap is now 5 years old, and as has clearly been evidenced today, a lot has changed over the last 5 years. Candace, let me start with you here on how do we include the sort of more innovative aspects of payments into the payments roadmap going forward as the US takes on the presidency next year?
Well, as we've been discussing, blockchain has shown that it is aligned with the G20 roadmap in terms of faster, cheaper, more inclusive, more transparent payments. And I think one of the big changes that's happened in those 5 years is that there was a lot of talk about the promise of blockchain 5 years ago. And now there are actual use cases, there are reports, there are statistics, there's data. The beauty of the blockchain is that the data is available publicly. So there's one report that just recently came out. It happens to be from an alum from the Stellar Development Foundation, who's now at Stanford. And she analyzed 5 years of data from a company called AirTM, which is a payments company that uses USDC on Stellar. And for 41 million payments, she goes through and compares it to the G20 standards. And for just one little data point, which is 96% of the payments on AirTM were well below the 1 hour settlement mark. I think most of them were in minutes, but she used the 1 hour for consistency with G20. There obviously still some work to do on costs, but I do think that the G20 can play a really important role in working on these questions of interoperability and standards, and particularly focused on safeguards as well. But the data is there, and it doesn't have to be speculative anymore, that can be faster, cheaper, more inclusive, and transparent using blockchain and stablecoins.
Maria, same question to you, but I'll add that as the US takes on the G20 presidency, France will have the G7 presidency. So can these fragmented issues that we're talking about be bridged across those two fora?
Oh yes, absolutely, and it should. I mean, if you think about the financial flows that are going across the two continents and globally, they're huge, and technology here is our friend. We can actually, we've seen it actually in the BIS experiments that were done. We've seen the huge benefits, both in cost and in time, that we can get out of this new technology. So it's just a matter of coming down, understanding standards, setting standards, and I remind also of the big elephant in the room, which is China.
Yeah.
That as we are talking about it, there is a parallel world in which a cross-border system is being developed, which is alternative to the one that we are thinking about now. So there will be almost two systems across the world that would at some time need to talk to each other. So the more we can work on the network effects, of course, the better it is. It's just that I think from the European perspective, the cross-border element needs to be addressed in terms of efficiency, but at the same time preserving the economic security argument, which for us is not a trivial one anymore.
Great, thank you. We're going to do now what is my favorite part of actually running a panel, which is a lightning round. The question that I'll ask all of you as we end our panel today is, what is the one issue of regulatory harmonization between the EU and the US that you'd like to see more attention on? And maybe we'll start from that end of the stage. Jesse.
All right, I've got two. One that came up in the course of this panel. We need to harmonize on whether it's Agora or Agora. This is the great tomato of the central banking world at the moment. Has to be resolved. The one that I'll focus on is, I think that we are seeing more and more data requirements, data localization, data frameworks being put in place, and often being put in place in a way that is not adequately considered within the realm of the work of AML and CFT enforcement agencies, the FIUs. And so I think that there is a real need to get those two groups, the FIUs and the data protection and data privacy regulators, talking to one another. And I'll give a plug here for some great work that Jen and her team at the FSB are doing under the G20 roadmap, creating a task force to really start to bring those actors together and try and find ways to reconcile their goals. I think that's some incredibly important work, and we're really excited to be part of it at Mastercard.
Thanks, Jesse. Candace, over to you.
I guess I'll pull together all of my answers before, which is working on those interoperability standards, whether it's pulling in the G20 to help with that, whether it's working on a very specific Genius Act implementation of the reciprocity requirements, and certainly in the EU, focusing on MiCA, kind of expanding and addressing that multi-jurisdictional question of stablecoin issuance.
Jennifer.
Well, I hate to be repetitive, but I also was going to say data. This is where we see the most frictions arising cross-border, and it's something we've been focused at FSB. We've been focused on it for quite some time. As Jesse said, last year we published recommendations for how to address some of the frictions arising from data cross-border. And when I say that, it's everything from how should data be presented in sanctions lists to data privacy and protection laws and how are they implemented cross-border. But what we found, the overall consensus was there actually is no forum for payments folks, AML, CFT folks,
Right.
sanctions folks, and data privacy protection people to come together and talk about it. So what we've done is stand that up. We've had our first meeting in May. We'll have another in December, it's early days, but I think it has a lot of promise to looking at practical solutions to those problems.
Yeah, really good call to action there for next year as well with the G20. Maria.
So Jesse is none of the two, actually. It's actually Agora. So, but on a more serious note, I just to reinforce what my fellow panelists have said. But from the point of view of financial stability, we mustn't forget that the global cross-border payments are global payments, and we need to have a minimal harmonization that is going to prevent financial stability concerns. We don't want to go back to the global financial crisis. It's only 15 years back, but we seem to have forgotten it. But this is absolutely essential for the sector to thrive, for payments to improve, to preserve financial stability. And of course, that means harmonization and common standards.
Great, thank you. If you want to know my answer to this, you'll have to see me outside. But please join me in thanking our panelists today for this great conversation, and thank you for being here with us today. Thanks.
Thank you.